Now, investment analyst Robert Omotunde joins me in our Lagos studio for much more details on this discussion. Good to have you join us, and a happy new year.
Looking good. Thanks for having me.
Now, Robert, let's start off with the prediction from the World Bank. Now, we're expecting 4.3% growth rate. Looking at emerging economies, Nigeria's projection for GDP growth rate is about 2.5%. Now, considering all of the issues we are having, the US-Iran conflict, US-China trade war, and a whole lot more, tension is somewhat easing, but also coming back again. What do you make of these figures?
Well, I mean, it will be an interesting play for the global economy in 2020. I mean, coming off some of the issues, trade issues especially, which more or less boxed the global economy. The United States and China are the two biggest economies, whichever you're looking at, whether you're looking at it from a purchasing power parity or you're looking at it in actual nominal terms. And the trade war, between these two countries, especially the last quarter when we were expecting that there will be some truce, between the two countries. I mean, the phase one deal, dragged on for so long. In fact, if you are a trader in USTs, US Treasuries, you will have been beaten or made a lot of money depending on where you're playing. Because today, Donald Trump comes out and say, oh, we are reaching an agreement with China. And then tomorrow, he's saying, well, we are not so sure whether we are going to reach this.
We're somewhat optimistic about that one.
Again,
but
so
looking at
what
Iran,
we saw in 2019 was more of a drag on global growth. And going into 2020 was the Iranian issue, when there was a strike. But what gladdens the heart of most watchers is the fact that it seems like there's a de-escalation, when you look at the comment from the President Trump, when he says, oh, it's not likely that the US is going to strike again. If you look at the attack, you will find out that there was no life lost. Perhaps it was intentional that the Iranians just wanted to act in order to satisfy their nationals who have been saying, oh, there will be, a revenge, from their angle. But they were very careful not to, make that lead to any loss of American life. So to that extent, we might see some level of de-escalation. But it's optimistic now because we are hearing that there's likelihood of a next week signing of the phase one deal. What we are not sure of is whether the phase two deal is going to come into force. But what gladdens the heart in all of this is the fact that we are still seeing an improved prospect, so to speak, in terms of global growth, and then when you drive down into emerging markets, other frontier economies, particularly for sub-Saharan Africa, where we're also expecting that there will be about 5.2% growth, in SSA economy, coming from the 4.6% which we recorded in 2019. Overall, issues about trade, are dominant in the expectation of global growth for 2020, and the extent to which we're able to sort most of our trade issues coming from US-China trade deal, to Nigeria's AFTA, African AFTA, in place of how Nigeria, relates with other economies of the world. Nigeria's economy is projected to grow at 2.5%, off the back of a 2.4% 2.34% estimation in 2019. What we saw in the last quarter, quarter of 2019, third quarter of 2019 was an improved growth figure, which there are expectations that Q4 may as well be an improved version of what we saw in Q3. But going into 2020, there are still, cautious optimism in terms of how far Nigeria's economy could grow.
Words out of my mouth.
How far Nigeria's economy could grow. Because if you look at, some of the issues that the World Bank mentioned, World Bank mentioned the fact that Nigeria's economy is not competitive enough, for the sort of growth, that we expect will take, us to the next level. If you look at where we were coming from, before 2014 when we had that global oil crash, we saw that we were growing at between 6 to 7% on the average, consistently for 10 years, say between 2004 and 2014. And today we are talking about growth, that could barely, get up,
and then the population growth is much higher than that.
Exactly. So again, for 2020, for us to be able to, go past this level of, what I call minuscule growth level, 2.2%, 2.3%. For an economy that has potential to grow double digits, especially when you look at our robust demographics, vis-a-vis, the productivity level, which is very low at this time because unemployment is rising, and
inflation still going high.
Inflation is still high, a double digit, and the fact that government has claimed they will create a lot of jobs, over the next 10 years, up to 100 million. I don't know their template of how they want to get that done because, there's been no articulation of how that is going to be achieved. But more or less, we know that we have to grow this economy, and if we must grow the economy, we need to create jobs.
Robert, I want to have a reaction from you now. The federal government has made its stance clear. It says that we don't have a debt crisis. What we have is a revenue generation crisis. Now, the World Bank is also saying that policymakers have to seize the opportunity in terms of undertaking structural reforms that are broad-based.
Yep.
In clear terms, what does this mean to the Nigerian government in an advice?
I think that I think it's not peculiar to the Nigerian government. Policymakers oftentimes, we want to stick to the statistic that favor them. But when we look at debt sustainability, or debt structure of a country, such as Nigeria, we can't pick a statistic and analyze and leave the other. Right? So what that speaks to is the fact that, if you see anybody speaking in government, they will tell you we are not having a debt crisis, just like you mentioned, because again, our debt to GDP ratio is within the tolerable limit. For countries in our category, we could have debt to GDP of up to 70%, but here in Nigeria, well, we are not even 25% debt to GDP. So the argument will be that I see the gap from 25 to 70. We still have a lot of headroom
but
for borrowing.
Is still a whole lot more.
Now, but look at the other flip. The flip side of that is that when you look at your debt service to revenue and you see what you're paying back in terms of debt, we're not even talking about paying the principal, of this debt.
Interest.
We're talking about the accrued interest. As our estimate for 2019, maybe we'll close at about 60% of debt to GDP. Debt service to revenue. Right? Now, at the pace of borrowing the government is trying to pursue in 2020, we have $29.8 billion of borrowing. There is no how our debt service to revenue will not inch closer to somewhere around 80 to 85%. How sustainable is that? So what we are saying is that we can actually increase our capacity to borrow more if we reform structurally. There are so many structural deficiencies in the economy. Now, if we pursue certain reforms that allows our economy to be opened up in certain sectors, specific sector of the economy, like the oil and gas, the power sector, for example. It seems like in the power sector, for example, there have been a lot of reforms, but those reforms, are still not adequate to open up that sector because government's hands are still deep in it because government still wants to control prices, tariff. We're talking about electricity increase in electricity tariff in 2020, and some groups have headed to court. The court is restraining, from pursuing that agenda. There's no economy that can grow.
The language
when there is no.
The language of cost-reflective tariffs and prices has also raised its ugly head the whole of 2019, and it's once again biting harder into 2020. We look at fuel subsidy gulping as much as 1.5 trillion naira annually, and we had some staggering reports also released just a few days ago, and now we are looking at electricity hike as well. So now let's choose between our demons that we are fighting with. If we have to deal with subsidy in terms of fiscal stimulus or structural reforms, which would you say we should still sustain some level of subsidy, or do we just scrap everything and have the market determine?
I think the wrong thing that we've done consistently in this economy, possibly since independence, is the fact that we have consistently subsidized consumption. And to the extent that we are not ready to move away from that model.
And it's not sustainable.
It's not sustainable. In fact, it's hurting the economy. You mentioned it. If you estimate subsidy at about 800 billion naira on petroleum product, PMS to be specific, that's one single product of all
of the variations.
Others have been deregulated to the extent that market is now determining the prices, And then the government claims that 800 billion is to subsidize because a lot of poor people are in that net, but that's not absolutely correct. So the point is that we have to move away from subsidizing consumption to subsidizing production. In fact, we should do away with petroleum subsidy on petroleum products, and as well as the power sector subsidy, which we'll dip into right now. Today, the average electricity tariff per kilowatts, depending on which state of the federation or where you stay in that state, could range from, say, between 18 naira to maybe about 25 to 30 naira per kilowatt. But in actual fact, the technical term we use in that sector is FCOE. FCOE is the levelized cost of electricity. If you analyze, and you estimate based on your own sources of power generation, your LCOE can be as high as 70 to 80 naira per kilowatt. Yet government is charging between 18 to 30 naira per kilowatt.
Not feasible.
So it's not sustainable that there will be any investment in that sector, especially because of the cap on tariffs. So if we deregulate that sector, the argument will be that, there are three lines, there are three aspects of the value chain. Generation has been completely deregulated. Transmission is still held by government, but distribution is also almost completely deregulated because, again, the private sector owns about 60% of it. But the point is that transmission is everything. And to the extent that we are centralizing the transmission of electricity, it's very difficult for us to move full-fledged private sector. And that is what can unlock the growth in that sector and create more jobs. Robert, it's not by government rhetorics of saying we're going to create 100 million jobs.
Okay, now we've talked about the power sector and a little bit more about that. Let's now talk about manufacturing, because that's one of the advice of the World Bank as well. We've seen quite a momentum build up in terms of our manufacturing index here in Nigeria, but still not necessarily enough of investment, aggressive investment in that area. And let's now also talk about the loan-to-deposit ratio as well to support the real economy. To support manufacturing, you need the banks to also lend as well to ensure that we have indigenous growth. But at the end of the day, some would say pressuring banks to meet 65% or even inch up a little higher as to previous prediction of 70%. Well, the CBN has retained 65 for now. In all of these, we still have market issues that define how much these loans will still be used for the main investment, because at the end of the day, an average person who goes to take a loan of, say, 10 million naira spends no less than half of it treating power, treating infrastructure, road, and all of those other issues. What should we be doing right if we are to support the real sector of the economy?
The manufacturing sector is very critical to not just driving the growth momentum of the economy, but also helping the agenda of government to create jobs. Now, if you look at the structure of our economy, after agric, let's start from the broad categorization, services sector. Services account for almost 50% of the entire real GDP of this economy. Now, when you take out services and you take out agriculture, which is more or less still on the primary stage, because from farm to the market, no value addition, so to speak. And then you take out the oil element of it, which is purely primary. Manufacturing is accounting for barely 15%. I think it's around between 12 and 15%, depending on the quarter you're looking at, right? Now, and you look at economies that have succeeded. Look at China, for example. It's a productive economy, because, it's an economy. We are jumping a stage of growth. Normally economies will move from primary, to secondary, and to tertiary. Tertiary is when services actually dominate. But Nigeria, we actually jumped that manufacturing phase of our growth trajectory, and then we are now talking about services. Services all over the place. Meanwhile, the fabrics of the economy are suffering because people are out of jobs. We're talking about close to 100 million. I think about 94 million people living below the poverty line, $1.20 per day. That's barely 500 naira per day. So for us to be able to tackle this issue, then manufacturing will be an issue, which is why the central bank is now trying to, help the SME businesses to grow. And unfortunately, some of these businesses are still largely in the services sector. For us to drive growth in that manufacturing sector, there are a lot that needs to be done. maybe some kudos can be given to the central bank in the recent segregation of the market, you know, for treasury securities.
Exactly.
Now, today we are talking about 1 year treasury bills at a rate of about 5.5, yielding about 6.3% or 4% per annum. Now, if that is used as a benchmark, never minding that inflation is at 11.9%, if that is used as a benchmark, it means that we could see corporates come to the financial market, the capital market, and borrow at a lower interest rate. But those corporates will only be prime borrowers. Not every corporate can have access to that sort of market. So others still have to go through the banks. Now, the banks believe that the risk in the economy is so enormous that they don't want to take the risk of lending to sectors that are not, standing on their own, and which is the target of the central bank. So in this case, loan-to-deposit ratio at 65% is supposed to encourage the banks to lend. Otherwise, the risk, the portion that is not meeting that threshold, being quarantined at 0% interest rate. But you know what interesting is happening? The banks do not mind, especially the big banks that have suffered from, the NPL issue that we had between 2016 and 2017. Some of them do not mind to lose the deposit, which they could have used in, generating more income, because the risk in the economy is so high. So how do we de-risk the economy? It's by putting up the reforms that we need. BVN is a good example, for example, but when you look at other issues that are tied, the fact that we are not centralizing our database, it creates a lot of problem that needs to be addressed before the bank can find it comfortable to lend.
Okay, Robert, we are lacking time now. We'll definitely have another round 2 of this conversation. Absolutely. But before I let you go now, I just want your take on the role of sensitization, especially from the CBN and other revenue-generating agencies. For the bulk of 2019, we've seen pretty much poor sensitization or communication. Look at the TIN for operating accounts. People are still confused. Is it for personal or corporate accounts, and a whole lot more, value-added tax, etc. What's your word as well when we are talking about reforms to drive growth? We need education.
Absolutely. So I think the word here should be coherence.
Okay.
So when we're communicating with the public, with all of the laudable ideas and projects that the government has in mind to drive the engine growth of the economy, we need to be coherent, and information should be centralized, not one agency of government communicating A and another agency communicating B, and then the people get confused.
Thank you very much for your time. It's been a pleasure having you, Robert Omotunde, financial analyst. We'll definitely have a part 2 of this, and I'm sure you'll grant our invitation. Thank you very much for your time.